they can lower interest rates further. And, you look globally, interest rates are headed down almost everywhere. In Europe, it's a negative rate. It's just insane what's happening. But the reality is it's very good for India. The other thing is I believe that the Indian government could afford a greater deficit. I believe 3.5, I think it is now, against GDP, could go up. And they have a lot of room. I believe they could go to 5.
The budget is somewhat less relevant. It's really more about the policy impetus that the new government has, and there are two things that they need to do. First, in the near term, finding a way of solving this liquidity crunch that is going through in India is absolutely critical. Effectively, if they don't do anything on this front, the likelihood that growth falls off even further, I think, increases meaningfully. And this is something that they can address pretty easily if they want to. And the second thing, of course, is from a longer term perspective, the structural reforms that need to be unfolded for the India to get to its manifest destiny, recognizing that there's no natural way to get there. They have to actually do a whole lot of hard work in terms of facilitating capital deployment.
We're expecting some initiatives, be it on infrastructure, being it on aiding rural distress, etc., that can certainly help. But also, I think the central bank has a significant part to play, and it's begun that part by cutting rates. I guess the issue has been not only election uncertainty, which is now out of the way, but clearly, to our mind, the cost of capital has been still too high. Real interest rates have been too high. And obviously, the ongoing issues around certain NBFCs and the liquidity squeeze that we're seeing in certain pockets of the financial system are clearly still hurting. So those are the sort of key priorities that need addressing.